So we're here, day 2, MPE in Berlin. It's been another fantastic day of conversations. I'm with Hamish Johnston this morning, crypto vertical lead, EMEA and APAC at dLocal. Welcome, Hamish.
Thank you very much.
So, Hamish, we're going to talk about stablecoins today, right? From your perspective, where are you seeing the most real-world usage at the moment with stablecoins, and is there an actual problem it's solving?
In emerging markets, definitely. I think we play in a different kind of playground to European merchants. At dLocal, we see a huge amount of adoption when it comes to B2B payments. So we have merchants that will be collecting local currency for, and then we'll be settling them in stablecoins. The kind of benefit there being that we're bypassing the traditional banking rails and the SWIFT network, if you like. So we're able to settle them almost instantly and at a much lower cost. And then the second piece is kind of the treasury movement. So we have a lot of companies that work in emerging markets like Argentina, for example, Nigeria, where what they'll do, instead of holding local currency, they prefer to hold a digital version of the dollar. So they'll be holding USDC or USDT to kind of mitigate the risk against FX volatility. On the back end of that, so we have the settlement piece, the treasury piece, then we have the funding flow. So we have merchants that will fund us in stablecoins for when we're doing the local payout leg in emerging markets, because obviously they can send us the USDT or the USDC, which is basically sent instantly in less than, 5 minutes, maybe a minute. Where if they were to send us USD, for example, that could take 3 to 4 days. It's much more operationally effective to use stablecoins for funding dLocal, for example. Then there's the kind of more nuanced piece. This has maybe come up a little bit more in conversation over the last 2 to 3 years, which is actually stablecoin as a payment method, which is something that's definitely newer, less adopted, but something that we're finding like a lot of Fortune 500 companies having the conversations now about how to use stablecoins as a payment method.
Okay, so sticking with that usage piece, are you seeing fundamental differences between how stablecoins are used in emerging markets against, say, European usage?
Definitely. I think in emerging markets, it's a payments tool and a volatility mitigation tool as well. When you look at Europe, obviously I'm from Europe, I'm from the UK. Stablecoins are basically used as more of a trading tool. It's somewhere to park your funds overnight while you wait for to do your next trades the next day. In emerging markets, it's a core tool for payments and B2B treasury. Without it, honestly, I don't think there's a way you can operate in emerging markets now without using stablecoins to operationalize your business.
Yeah, okay. And what does it take to turn this kind of internet money, if you can call it that, into a compliant enterprise-grade payment infrastructure in those emerging markets?
Yeah, well, that's what dLocal focuses on. We're a publicly listed PSP. We're not a traditionally crypto company, but we've adopted the tech, and our idea or our goal is to kind of provide merchants with a Swiss knife, if you like. So we'll do the local collections, but we'll on-ramp for you to USDC or USDT. We'll do the off-ramp as well. So if you're a merchant looking to adopt the tech, you need a solid on and off-ramp provider. You need a custodian that you can trust, and then you need to either have in-house regulatory expertise or rely on a company like dLocal, which has global coverage, global MLROs, global regulatory teams that can support and make sure that what the markets that you're operating in, you're operating underneath the kind of the rules and regulations of the local markets.
Okay, and so which kind of merchant use cases are you finding are best combining stablecoin usage with local payments?
Yeah, I think it's a good question. It's markets where our merchants are collecting local currency that's extremely volatile. Argentina is a good example of that. As soon as merchants collect local currency in Argentina, they want to offboard it. They want to get rid of it as quickly as they can. So the idea there is we'll offer the local collections and instantly convert it from Argentine pesos into USDC or USDT. So that's a good example. Not just Argentina, but lots of markets where the currency fluctuates, almost more than a digital asset. It makes sense to kind of peg your balance to the US dollar.
Okay, and I'm going to ask you to gaze into a crystal ball here and ask what might surprise people about stablecoin usage in emerging markets in the next 3 to 5 years.
Well, I think, to be honest, I think the most interesting piece is the retail adoption in emerging markets. Emerging markets is 85% of the global population, and it's where the majority of stablecoin adoption or crypto adoption is coming from. I think, interestingly, there will be 40 to 60-year-old, 70-year-olds in Nigeria that have crypto wallets, which is just like almost unheard of. So on the retail side, that's super exciting. But in the next 3 to 5 years, stablecoins, in my opinion, will not be part of the conversation. It'll just be part of the plumbing. It'll be something that we're not thinking about anymore. It'll be hidden in your stack, and you won't be thinking about how you're sending money cross border. It'll just be there. It's the plumbing. It's the only way really to move funds cross borders in emerging markets. So realistically, if everyone plays their part and regulations clear up, it should just be a part of the plumbing, where it's not something you actually have to think about.
Brilliant. Hamish Johnston from dLocal, thank you for joining me.
Thank you very much. Cheers.